My fellow investors, fellow Jamaicans, welcome back to the Monitor JA channel for another deep dive into the Jamaican business landscape. And today, we are looking at a massive comeback story for one of the island's listed auto dealers, Jetcon Corporation. Now, if you follow the Jamaica Stock Exchange, you know that 2024 was a challenging year for the company as they faced a significant net loss of over $74 million. However, the latest financial results for 2025 show that Jetcon has officially swung back into the profit column in a very big way. The driving force, no pun intended, behind this recovery is a bold and decisive strategic shift from pre-owned vehicles to new car sales. For years, Jetcon was a staple in the used car market, but the company has completely transformed its inventory to meet challenging consumer demands. Let us look at the numbers because they are truly staggering. Revenue for the company nearly doubled, soaring from $520 million in 2024 to $941 million in 2025. Even more impressive is the jump in gross profit, which rocketed to $239.5 million from just $21 million the year before. This incredible performance resulted in a net profit of $95.2 million for the year. This means that Jetcon did not just recover, they surpassed their previous standing, delivering earnings per share of 16.3 cents to their investors. So, what exactly caused this surge? The answer lies in the massive market take-up of the BAIC line of automotives. Jetcon began importing these units in 2023 and was officially appointed as the sole distributor in August of 2024. Since then, they have opened a dedicated showroom in Kingston and have seen massive momentum with 4 specific models: the X55, the X35, the BJ30, and the BJ40. This pivot was a direct response to a stagnating used car market. CEO Andrew Jackson noted that higher lending rates in Jamaica have made financing for second-hand vehicles much less attractive for the average buyer. By offering brand new BAIC vehicles with prices ranging from $4 million to just over $8 million, Jetcon provided a competitively priced alternative that included full warranties. The company's inventory shift tells the whole story. Their new car inventory surged to over $170 million, while their used car stock was slashed from $90 million down to just over $6 million. This shows a complete commitment to their new warranty-driven after-sales model. Of course, growth comes with costs. Operating expenses did rise to over $129 million, largely due to a significant increase in marketing and selling spend to build brand awareness for BAIC. They also secured a new $50 million financing facility from Sagicor to support this expansion and invested $45 million into showroom and service area upgrades. Despite these expenses, the company is in a much stronger cash position, with cash reserves rising to nearly $15 million. CEO Andrew Jackson said that the BAIC awareness is growing every day, and orders are now arriving in much larger tranches to keep up with the demand. It is a powerful example of a Jamaican company identifying a major market hurdle like high interest rates and pivoting their entire business model to find a path to growth. Jetcon has essentially bent the curve of the struggling auto market by focusing on value, financing, and new car reliability. So it's over to you guys now. What do you think about Jetcon's massive pivot? Have you seen the BAIC models on the road in Kingston? And would you consider a new BAIC over a traditional used import? Drop a comment below on your thoughts of this turnaround and what it means for the Jetcon stock price moving forward. If you found this breakdown helpful, make sure to hit that like button and subscribe to the channel for more updates on the Jamaican economy and the stock market. Thank you for watching, and click the link on screen now to watch another Jamaican financial content. Catch you in the next one.